FY19 has been a forgettable year for air conditioner manufacturers as weak summer conditions have led to an inventory built up across trade channels during the year, and to clear the same, AC manufacturers were forced to offer steep discounts and extend working capital cycles as well, especially in the winter months, that is Q3 and Q4. Let's do a three-point analysis to understand what Q1 may have in store for these companies and where should investors focus on. 1. What's the outlook for AC manufacturers in Q1 FY20? Well, while Q1 FY19 was weak on account of cooler temperatures and dampened demand for ACs in northern states, which constitute nearly 30 to 40% of the top line of AC manufacturers, and consequently the sales got impacted and profits dipped substantially. In contrast, in Q1 FY20, summers have been harsh and also went on till the end of June almost across the entire nation. Therefore, a visible improvement in revenues will definitely be seen. Though year-on-year revenue growth is likely to be healthy, there is a possibility that it could be lower than expected as liquidity constraints continue to persist in the NBFC space. From a macroeconomic perspective, the consumption sentiment also remains quite subdued at the moment. Operating margins would be influenced by volume growth in terms of AC sales and also the impact of raw material prices due to the movements in commodity prices and also the exchange rates. 2. How are prominent AC manufacturers really placed right now? Amber Enterprises, that manufactures room air conditioners and also components, will benefit from client additions, operational efficiencies and also product mix shift towards inverter room ACs and benefits of inorganic growth strategies. The stock has been trading in a range right now, but there is no major downside from the current levels that is seen, and the stock is well placed in the mid-cap category. For Blue Star, improving profitability in the electromechanical project segment has been attributable to better project selection in India, also focus on high-margin products and a positive outlook in the international markets as well. The stock has corrected quite a bit in the last 1 month but still remains an expensive pick. The modes of the business are convincing enough to merit the attention of new investors. Johnson controls Hitachi, which aims to increase its market share. The management also plans to enhance its reach in the Tier 2 and Tier 3 cities, South Indian markets and international geographies as well. However, despite correcting sharply in the last 3 months, the stock still remains pretty expensive and investors could look at accumulating the stock on dips. Voltas has been growing steadily on the back of government-funded urban infrastructure projects, but the near-term focus of the company will be on promoting refrigerators, washing machines and also microwaves under the Voltas Beko brand. Now, therefore, the AC segment margins may get hit. 3. Which stocks should investors consider there? Well, at Moneycontrol Research, we are quite optimistic about the growth prospects in the AC space because the penetration of ACs is very low in India, which indicates there is a huge growth headroom. Climatic conditions are tropical through the nation. There's also the government's emphasis on expanding electrification coverage also, and we also see higher disposable incomes in the hands of buyers. At this point in time, Amber Enterprises and Blue Star remain our top bets in this space.